Welcome back, everybody, to another episode of Fintech Fridays. I'm Brian Vieaux, President and Chief Operating Officer with FinLocker. And with me today is Branden Cobb. Branden is with marketingexecs.us or marketingexec.us, I should say. This is going to be a cool conversation because Branden and you and I literally connected on LinkedIn a few weeks back. And so I think I told you before we hit record, I love to have conversations like this where I'm just learning about somebody, a company, a product, a service. And that's what we're going to do. We're going to kind of learn a little bit about you, your background, and what you guys are doing at marketingexec.us. So with that, welcome to my little podcast, Branden.
Thank you, Brian. Yeah, appreciate you having me here. And I think there's a lot of crossover with my career experience working in real estate and having some joint ventures with mortgages and different things. So look forward to the conversation.
Right on. So let's get right into it and kind of tell us what marketingexec.us does, who you guys are, who you are, what you do, and how you serve your clients.
Sure. So for about the past 2 years, I've been consulting a variety of clients in a fractional capacity. So what I found, especially going through COVID and then coming out of COVID, is that some companies have either they either don't have a fully established marketing department, or if they do, they may have maybe like a more junior person leading, and they just need some additional guidance. So I've been coming in and what fractional means is you can be working with multiple clients at the same time. So fractionalize my work week across the board and come in, really set up systems, set up connections and contacts with different marketing vendors, but also other, especially like in real estate, other real estate contacts that I have from doing marketing in the real estate industry for 6 years in-house previously. So yeah, you basically come in and kind of put the wheels in motion and then step back. And the whole goal is not to have to be there for the forever and permanently. It's just kind of set people on their ways. And I've done this a couple different times here in the real estate industry as well that I can speak about if you'd like.
Yeah, I'd love to go into that because I think as you mentioned, kind of coming out of the pandemic, and of course, as it relates to real estate and real estate finance, it's no secret that we're in a really tough environment. Both, well, frankly, from an economic perspective, it's probably as tough as it's ever been. And I'm seeing from my seat, a lot of mortgage companies have definitely scaled back their resources. And so I think companies like yours and services like what you're providing, I think make a ton of sense in this market, especially for some of the smaller, companies that are out there that, maybe today can't justify a full, chief marketing officer type structure. So let's dive in a little bit and kind of peel back the onion a little bit on some of the things you're doing and help people understand how your company and your services may suit them, for where they are right now. And I like what you said. It's, it may not be a forever engagement, but, for the next 6, 12, 18 months and, case by case, it may make sense to have kind of a fractional CMO versus, a full-timer.
Sure. Yeah. So let me preempt by just saying, I guess I was in-house here in San Diego of a company called Coastal Premier Properties. It was a 6-office traditional real estate brokerage, maybe 130 agents, family owned. Positioned them really well. I was their head of marketing, and then positioned them well. And we ended up getting acquired by Corcoran Global Living. So Barbara Corcoran's company, she started in New York, and then they started franchising, out the name and everything. And so we had this company that acquired us. I mean, it was a big boom, and then as the interest rates started popping, it also hurt them as well. So the thing is that we became 80 offices and 3,000 real estate agents, second, third largest real estate brokerage in California, and then we were also in Nevada and Ohio. And so with this, both back at Coastal Premier and then with Corcoran, I was heading up demand generation. And what that meant is, we're partnering with mortgage companies to help generate leads. And whether we're generating a buyer lead, we know the way we would always do it is we'd have in-house escrow. So I know some states do escrow, some don't, but California does escrow. So we would have, it's an independently owned escrow company, but it is basically servicing all the sellers that the company is representing. So we would always call it, if we represent them on the buy sell side, that's a single. If we represent them on the escrow side, that's a double. And then now you bring in mortgage, and if we either get the mortgage, that's a single, or if we get the represent them on the sale, that's a single. But if we get the mortgage, the sale, the title, now we're hitting doubles, triples.
Yeah.
And if we add in title and different things, we're hitting a grand slam. So we'd like to pass around the leads a little bit, because you're sharing, as many of you probably do, you've got relationships with brokerages, and you're sharing possibly costs with lead generation activities. And if somebody inquires for a mortgage, they probably also can speak to a buyer's agent. And if they inquire with the buyer's agent, they can probably speak to a mortgage. So just in a high summary of that. And then recently, I guess the way it works is coming in. I helped a venture capital backed instant offer company that was buying 10,000, getting orders for 10,000 homes at a time. And so we would have to generate that demand. And so I say all this because I've got the experience in real estate, right, specific in how to generate demand. The way I work is, you just, it's an S corporation. So you pay that. You don't have to do 1099s and all that kind of, at the end of the year. And basically I work in 0.25 increments. So 15-minute increments, as much or as little as needed. Here, anytime that you want to reach out. And it can be for anything and everything, setting up lead generation systems, but also rebranding your mortgage company and all of that as well. So
let's kind of go into this demand side, because clearly today, given the market and what we're seeing with the lack of inventory, and you already mentioned it, the interest rates where they are, there's not enough business going on today for the realtors and the loan officers that are in our space. So we're going to see some contraction. We're already seeing it, but I'm curious from your seat and with your experience, kind of how you're thinking about or what you're seeing as it relates to lead gen. What I'm seeing as I kind of pay attention to the mortgage space specifically, and what loan officers are doing, I see a lot of focus on financial education, financial literacy, kind of thinking about, the next year's first-time home buyer and how do I get to them now or earlier and start to educate them. Mm-hmm. So that's kind of what I'm seeing on the mortgage side. I'm curious what you're seeing on the real estate side, on the realtor side, and how they think about, demand gen. My guess is they're maybe more focused on immediate gratification versus long-time nurture, but just what's your perspective?
Yeah. So a couple things there. One being your education and your messaging is basically what I think, and what I've heard a lot of realtors say is that if you right now you can possibly get in the prices. Here in California, they've at least stabilized and they're growing again. But they you can get in without as crazy of a price or as crazy of a market, and then if and when the interest rates drop, you just refinance back down. And when that refinance back down happens, the prices are likely to shoot back up again. So this could be, if you think that we're towards the top of the interest rate hikes, then it could be a perfect time to get in, because you're maybe getting in at the lowest price tag. you got to figure out how to make the monthly payments work. But if you can get in at the
Right.
lowest price tag and then ride that refinance down the way people did during COVID, then you are, I mean, you're in the best of all worlds. So educating people, maybe making that pitch a little bit. And then I think also another thing is, you know, who are some of the buyers? If it's still cash buyers, possibly getting in with them and just seeing if there's ways that you can at least finance a portion of what they're
Right.
doing. And so I think those are important things. And you said the nurturing. So I want to hit on that because
Yeah.
yes, I agree. I've always said that real estate is, there's not a lot of loyalty there in the consumer loyalty. So of course, if they've got an agent they've done multi deals with, they're going to love that, or maybe a mortgage, a loan officer as well that they're working with over and over. But I mean, they're going to go likely who can give them the best rate, or
Right.
you know, who even if they have to double in with the listing agent to get their offer accepted or something, like they're going to do whatever they got to do at that point in time. So I do believe, while from a lead generation standpoint, it's certainly more profitable if you can get them earlier on in the funnel and then nurture them down. That is more profitable, less expensive per lead than getting them closer. But this is a business that you got to pick off people
Yeah.
right at the right time. You need to be at the right place at the right time, because there's not a lot of loyalty. So I like to focus lower in the funnel for real estate. Other industries, I may go higher up in the funnel. But
Yeah. No, that's super. It's intuitive, right? It makes sense. Um, there's a couple things in my mind as it relates to real estate specifically, and then you can talk about the financing. That's a byproduct of buying a house, right? Um,
mm-hmm.
it's it doesn't happen often in a consumer's financial life, right? Unless they're an investor, buying investment property. So the average consumer who starts with their first time, the home they buy for the first time, maybe in their, over 30 or 40 years, they may buy 5 or 6, maybe 7 to 10 homes, but probably closer to 5 or 6.
Mm-hmm.
I mean, I can speak to myself personally. I'm 55, bought my first house when I was 24, and we're in our third house, right? So, that's 3 purchases over whatever, a long time. And so the loyalty piece, again, this is my perspective. I don't think the consumers go out to be not to be or to be anything but loyal, but because it just doesn't happen very often, there's not a lot of reason to stay, meaningfully connected with your agent when you're talking about a 12-year span, or in my case,
Sure.
22 now. So, I think on the financing side, there are more opportunities, as you talked about, taking advantage of, refinances and maybe some pulling equity out and doing some different things. So I think the loan officer may be in a better position to figure out how to become that kind of lifelong financial friend as it
Mm-hmm.
relates to home ownership. Let's pivot a little bit, because I'm curious on what are some of the lead sources that you think are the best sources for realtors and mortgage companies to partner up on today as it relates to that top of funnel or lower in the funnel when someone's
Mm-hmm.
ready to transact.
Well, we always had a lot of success on just Google search, and I know that's changing now as there's Chat GPT and other things. But that's a high intent lead if they're really searching it out.
Yeah.
Of course, even more success of like a higher percentage per lead closing with the Zillows and that kind of thing. But those are expensive and don't always. If you got to find ways to be
Yeah.
better off than that. So yeah, I think that there can also be where you're setting up, I guess, agreements with companies. If you find people that are providing leads where they're giving them on a referral basis to others and not selling them,
Yeah.
they may be able to kind of require that you're getting at least pre-qualified or
Yeah.
possibly working kind of with your you. So the thing is, maybe they're getting a percentage. They're taking more of the risk as the lead generator. You're taking more of the risk, bigger reward too, but to collect on the back end.
Yeah.
But you can also make more stipulations with passing around those bases that I was
Right.
kind of saying there, and versus if somebody's straight buying the lead. Um, I wanted to say, because when you're talking about staying in touch and stuff, there's all those different platforms that you can send out the home value regularly.
Right.
They're not always accurate, but you can send them out regularly. I think that's a good touch point, but I'd like to see more of how you not just show them how much value is in their current home if they want to move up, but how that value can translate into the next bigger property. And
Right.
so, okay, you can take this value of your current home, this equity, and now with our current loans and everything else, we can get you into X property, because then that gets them starting to think to start looking around the different search platforms. So
Yeah, I think I love that angle, because I think what I'm seeing, again, I'm watching a lot of loan officers and what their messages are, and there's a bunch of studies that continue to come out that I think prove that owning a home versus not owning a home puts you on a better path to, we'll say financial freedom, whatever the heck that means, right?
mm-hmm.
It's clear that, generational family wealth is, you're more likely to create that when you own a home versus being a renter, right?
Mm-hmm.
And now we're starting to see, with the Airbnbs and all the different, kind of platforms that allow everyday people like you and I to become, kind of property managers, so to speak.
Mm-hmm.
I think you're starting to see these strategies, as you describe, where you could tap into the equity of the home you own right now and either use that equity to parlay it into the down payment for the move up home for your family.
Mm-hmm.
And then you keep the existing home. Instead of selling it, you keep it, and it starts to build an investment portfolio. How do you think about that when you think about kind of marketing and messaging to consumers?
Yeah, and I think that's spot on. And I personally here, I've got 2 condos here in San Diego, and condos are expensive. So if I was a different part
Yeah.
of the country, I may have 8 homes and stuff. But
Right.
the thing is that what I find is very interesting. I don't think a lot of people are aware. I don't know if it's this way in every state, but here you can use. If you get a lease signed on one of your properties, you can use
Yeah.
75% of that lease income towards canceling out the mortgage here to then
Yeah.
have more buying power somewhere else. So it makes it, every time I'm hearing friends or other people talk about, oh, I'm going to sell and move up, I'm always like trying to let them know that
Yeah.
there's a chance. California real estate is pretty gold, so it's like you could keep on to it and just still use your buying power in another way.
Yeah.
Since you did ask about leads, though, I wanted to tell you a couple of things, which is that we found, so that may be specifically helpful for generating, especially if you're driving traffic to your own site, whether that be through Google search or otherwise. But making a good landing page, not just sending them to your main site, but a good landing page that is geared for conversion and capture. Found putting on a chat bot is very helpful. And we can go into all kinds of specifics with the landing pages, but what I would say though is when you capture the lead, having it funnel into somebody and into a CRM system. We use Salesforce, and we connected with a call center. I can always, anybody reaches out, I can put you in touch with this call center, but basically, and they're volume based, so that they
Right.
can work small, big. But the thing is, you need to, if you reach out to the lead in the first 5 minutes, pretty good chance you're going to get in contact with them. If you wait 30 minutes, goes down significantly. After
Yeah.
24 hours, it's almost a useless lead. So that time and the way you nurture them through call, email, text, and in the first 2-week period, the amount of touch points and the cadence you use and
Yeah.
all of this stuff. These are the things that could really get in and consult you guys on. So
Yeah, I love it. And that's where, you'll hear speed to lead, obviously,
yeah,
as a key metric. And so for the smaller companies, if you're out there and you're watching and listening to Branden and I today, maybe you're a smaller lender, maybe you are an organization that just kind of has downsized a bit, and you don't have that expertise. Branden's platform, marketingexec.us, and there'll be a link here when we post this out to it, is the perfect consideration. And so, Branden, last question in terms of kind of, engagement with a client of yours. Do you have like any kind of minimum time frame or timeline that you would work with somebody, or can it be like literally a 1 hour consultation? How do you kind of look at that?
yeah, no, it can be a 1 hour consultation. Yeah, as much or as little as needed. And I've got people everywhere on that spectrum. And,
Sure.
payments are easy now. Digital payments,
Yeah.
Zelle, Venmo, PayPal, they're all can be
Yeah.
accepted for business purposes. So it's pretty easy just to clock it in and go. But yeah, thank you. I appreciate you
Super.
having me. And
Yeah, man. Like I
any
said
other
earlier, these are
questions,
the
shoot them to me.
conversations I love, because I love to learn about, new people who I hadn't met before, new businesses and new services. And like we said at the onset, given the environment and the economy in general, platforms like yourself are, I think, super important right now, because you guys, you're providing a resource, but you can do it in a way that doesn't, create a massive economic commitment for the lender.
Yeah, and I think just leave you on this too is like when you're talking about the education, the messaging, because you can get into all the fine technical details of demand generation, but on the messaging, just be authentic, be who, give them strategies that you truly believe in, that you would do yourself.
Yeah.
And that's where I'm saying, like, keep the property and rent it and move up to the next one. That's that's a strategy I would do myself. When I'm saying like that we're if we're towards the top of the interest rates, it always seems like in real estate, you could always flip it. No matter what market we're in, you could make a
Yeah.
justification why it's a good time to buy or sell. But that's something I truly believe in, is that if you can afford the monthly payments to get in now, it could be a really, really good time, because as soon as the rates drop, whenever that is, even if it's 5 years from now, the prices are going to shoot up, and
Yeah.
you refinance back down.
Love it. Well, that's a great way to kind of wrap on the conversation. Branden, thank you so much for coming on Fintech Fridays. And everybody else, I hope you tune back in next Friday for our next episode. Thank you.
Thank you.